What's up, everyone? It's Scotty with MoneyVest. So it seems like the fun time is over, and Wall Street really wanted to make a statement today with the markets selling off. I would say not super aggressively, but definitely pulling back quite a bit here with the NASDAQ down about 1.5%. We had the S&P 500 to the T, pinpointed right at that lower high and then dropping over 1.22% or down about 54 points here. And the Dow Jones here also dropping 300 points on another day, down about 83 basis points as well. Of course, next week is a big week because we've got the FOMC, we've got Federal Reserve, and we've got the SEP as well, the Summary of Economic Projections coming out from the Federal Reserve. So we will be live during that time. I will be covering all of that during, of course, the FOMC and, of course, the statement that is released and the market's reaction as well. But this week, we were more or less flat here after the inflation numbers came out. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. I have been doing some buying, and I plan to do more buying later this week as markets continue to pull back. And of course, see some more downside, and that's going to offer up some really good deals and discounts in the future. So again, links are going to be down below if you're interested in joining our MoneyVest community. You get access to all the members-only private videos, and of course, our intrinsic value spreadsheets as well. So this right here is going to be the state of the market. The Dow sheds nearly 300 points on Friday. S&P and NASDAQ suffer a second straight week of losses. So it ended up actually being a down week here for the markets, but not by a whole lot. So we didn't really see a brutal sell-off, but yes, it was a brutal sell-off on the day, but not so much on the week. So Ray Dalio says to hold cash temporarily, but don't buy debt and bonds. And this is a very important video. I did a video on this earlier, so make sure that you do check that out, because this really represents demand for bonds. And if the demand for bonds is low or non-existent, and at the same time the Treasury Department, the government, and the corporates are basically selling bonds, there's a significant imbalance of demand and supply, which obviously puts prices under significant pressure for bonds. Puts them lower, and of course yields are going to start to go up because there's an inverse correlation between prices and yields, which obviously creates a bigger problem for the overall debt of the US and of course for corporates as well. So definitely do check out that video, because it's a very, very critical video, and on the surface it doesn't seem like there's a lot to dig in, but there is definitely a bigger issue underneath this entire demand supply imbalance with respect to corporate and government debt. The Fed is expected to hold rates steady next week, but its guidance will be key for investors. So like I said, next week is the big week. We've got the Fed, FOMC, and they've already got, this is after a long time, right? The last time you actually saw the Fed was I believe in July, so we didn't have a meeting in August, and now it's almost towards the end of September. So it's been quite a bit of time until we've seen the Fed. So lots of inflation data, lots of unemployment reports have come out, and the Federal Reserve has had the time to process that information, and all of that is going to be addressed in their meeting, in the speech from Jerome Powell, not to mention the Summary of Economic Projections, which is going to give us the guidance for the following years with respect to interest rates, unemployment, inflation, and of course the GDP as well. So all those four things we are going to learn about next week. Oil just hit its highest level for the year, and some analysts expect a return to $100 before 2024. So finally, thank you for a headline. Finally, somebody woke up at CNBC and be like, okay, wait a minute, oil's finally going higher. We need to talk about it. So yes, it's been up over 45% in the last, I would say, since May. So May, June, July, August, September, so the last 4 or 5 months, it has rallied quite a bit. And of course, it's showing up in the inflation reports. And of course, if it gets up to over triple-digit numbers, that's going to be a bigger problem, because that puts upwards pressure on overall inflation, not to mention core indirectly also affects a lot of other goods and services. And we also talked about the healthcare insurance, right? So a lot of these things will, in my opinion, show up in the future prints for a CPI. We'll go over oil prices in just a minute, but this right here was the state of the market. So here's the thing, right? Oil prices and yields, those are the two main things that are pushing higher. And the more they push higher, the more pressure they put on equity prices. Yields pushing higher, there is a correlation between yields at a higher rate, so 10-year yields and 30-year yields. As they go higher, we know what happens, right? Growth stocks and tech stocks get hit because multiples compress, the discount rates go up, and of course, they have to be competing to the higher treasury yields. So that's number one. Number two, of course, if oil prices keep going higher, that's going to put more pressure on inflation. That's going to increase the probability that maybe the Federal Reserve is not quite done yet, and the probability for a soft landing starts to fade away. So those are just things that we have to be aware of. And if yields and oil prices both simultaneously keep going higher, that's going to put pressure on equity prices. That's going to put some cap to how high we can actually go from a multiple standpoint, from a discount rate standpoint, and as a result, we already know that multiples have expanded in 2023. We've seen a significant amount of rally in 2023 among a lot of stocks. I mean, NVIDIA, Meta, they're up like hundreds of percents. Tesla's up like hundreds of percents. So there's only so much upside that there is with respect to the equity prices when yields and oil prices, they're both on their way up. So that is a potential headwind to keep in mind, and understand that, okay, there could be a time of some consolidation or maybe even a pullback is what we're witnessing at the moment. So NVIDIA down about 3.6%, Meta down 3.66%, Amazon down 3%, Microsoft down 2.5%, Adobe selling off. So there was a pretty significant broad-based amount of sell-off in 2 to 3% range. And this right here was the entire market, with Apple mostly flat, Google mostly flat, Tesla mostly flat. But we did have technology, consumer cyclicals, healthcare, some stocks really just, starting to pull back. And all sectors, all S&P 500 sectors, all 11 of them were red on the day, as you can see over here. In the last 1 week, of course, technology is the only sector that's underperformed. And in the last 1 month, we've got healthcare, defensive, and industrials selling off. Everything else is still up. Energy kind of leading the way. That makes sense because oil prices are up. Volatility was up. Coffee prices, platinum, we got wheat, silver, feeder cattle, gold, soybean, all pushing higher. With cotton prices, ethanol, soybean, we got natural gas and heating oil, and of course NASDAQ pulling back. And Bitcoin was just hovering around 26, 27,000, and Ether also hovering around 16, 1700 on the day. So this was the NASDAQ selling off about 1.5%, down to 13,700. We got the Dow Jones down about almost 300 points, and the S&P 500 down about 1.22%. We're going to come back to this, but crude oil, as we talked about earlier, $91 a barrel now. So on the month, they're up over 9%, right? 9%. We are at the same prices as we were back in October. And of course, a breakout over $93 is going to send us to the same price from back in August of last year, so about 1 year ago. But this right here is going to be that next resistance at close to $93 or close to $94 per barrel for crude oil. So this is a pretty massive green candle that I feel like a lot of people have been ignoring, but obviously it is a very, very important candle to watch, and of course a very important commodity to pay attention to because that affects inflation overall. Ethereum here just under 1650. So again, resistance and target's going to be staying put at 1700, 1740. So that's going to be a level. And of course, Bitcoin here also bouncing right back up from that 300 SMA. And of course, that support at roughly around 25,000. And the next target and resistance is going to be at 28,000 for Bitcoin moving forward. So that's going to be that level for both Ether and for Bitcoin. Volatility here, on the other hand, was up right at that support at 1270. We talked about it, came down to as low as 1268 and then pushed up 7.7% as the market started rolling over. So again, we are at a lower level. So volatility overall in 2023 has been a little bit more subdued and muted. It hasn't really seen a significant spike. A couple times it has. I mean, of course, we saw a pullback in the middle of July going into August when volatility was up like 49%. And this right here was basically from earlier this year when there was, again, some uncertainty with respect to how this year is going to play out. But since then, we have significantly seen, volatility get crushed down over 58%. And right now, once again, we're sitting at those levels. So it is not unlikely for us to see maybe another 40, 50% rally here, maybe another 33% back up to 18, 19 levels, similar to what we witnessed in the middle of July going into August as well, considering the yields are up and of course oil prices are also pushing higher, thereby pushing pressure on inflation, thereby putting downward pressure on equity prices. So going over to the S&P 500, and this right here is the chart that we had, and this is the lower high and the lower low that we talked about in our previous videos. And what did we talk about in our previous market updates? We mentioned that if the S&P can break out above this lower high, which is this yellow line, right? So if I go over the daily chart, you'll know that we talked about this specifically, this lower high, and if the market can break outside of this downtrend, then guess what? The bears are powerless, the bulls are doing a great job, and we are potentially on our way to 4,600, right? So we need to break above 4,500 first, break outside of this downtrending channel in order to make sure that we invalidate this downtrending channel. Well, guess what happened? We did not, right? The bulls didn't. So we got rejected here. And to the T, like if you come over to the 30-minute chart, you'll see where exactly we closed yesterday. We closed at 45.11. So that was like literally towards 3 p.m., 4 p.m. Today we gapped it down. So this right here was the gap down, and then we continue to sell off further. So we're down 1% intraday, and of course 1.22% from yesterday's close. So getting a little bit of that rejection, and bidders are making themselves known that look, we are present here and we're not going to let you pass by from this lower high. And this next support is going to be at this potential higher low, which is going to be sitting roughly around 4380, 4400. And in the next few days, like Monday, Tuesday, Wednesday, I don't think the meeting's until 20th. So Monday, Tuesday, basically. So Wednesday is the meeting. I wouldn't be surprised if we continue to kind of coil a little bit, meaning that we are consolidating and we are coiling in for a much bigger move after the Fed. And when that happens, of course, it's really going to come down to a more directional move, and it's going to let us know which side are we breaking out to. Are we breaking down below 43.20, which is going to really solidify this downtrending channel, continue to make those lower highs and lower lows, or if we're going to see the bulls kind of power through and break out to the upside back over 4530s, 4600. I will point out though, like in this year in 2023, the week of inflation, the day of inflation, the markets have been higher, and that week also the markets have been higher. But the following week, after CPI numbers come out, we have seen red. We have seen weeks that have been down after the inflation numbers have come out. And there was actually a study done, statistical data that I presented in one of my other videos from Bespoke Investment. They actually did a study on this very thing, where on the day of CPI, markets were up, but the following week, the markets were down. So next week is going to be the week after CPI, and not to mention the Federal Reserve's FOMC, and of course seasonality is going to kick in, because towards the end of September, the last 2 weeks, the markets are usually down, right? And they are down pretty aggressively. So we've got lots of tides kind of coming together. That's exactly why I want you guys to be prepared and just understand what we're dealing with here. So support level is going to be next at this higher low at 4,300, down to as low as 43.26. So that's going to be this horizontal support for S&P 500, sitting roughly at around 4,300. So if you breach that level, well, then all bets are off, and we are going to be preparing ourselves for some nice deals and some cash secured puts to take advantage of lower valuations and, of course, some undervalued stocks. And we'll be dollar cost averaging, selling puts at those prices. You guys know the drill. But, of course, if we do get a breakout above 4,500, then that pattern is invalidated, and we are back up to our targets at 4,600, potentially back up to new all-time highs as well. Same thing is true with the NASDAQ, almost identical. So, again, we didn't quite get up to that lower high. Instead, already seeing a pretty significant red candle. So on the 30-minute time frame, you'll notice that, again, we didn't quite get up exactly to this lower high as we did with the S&P 500. That's the yellow line that I'm talking about. But, of course, we gapped down and sold off pretty aggressively intraday, down about 1.5%, and closing in at just under 13,710. And the next support really is going to be down to as low as 13,100. That's going to be a reasonable downside of about 3 to 4%. But again, a lot of that depends on what happens next week with respect to the Federal Reserve. Going over to the S&P 500, by the way, ASML breaching $600 down to 596, down 4%, and I'm super excited for dollar cost averaging into ASML in the future here, in the weeks to come, if it continues to sell off. But Apple here was down on the week about 1.7%, and down about 42 basis points, trading at just over 175. So we are right at that support, right? So not exactly getting validated, but of course it's starting to breach below that level. And if it continues this sell-off after this lower high rejected us, then the next level is going to be down to 157. That's going to be in line with this green circle all the way down to as low as 120s, something that we have already talked about for Apple. Talking about Amazon here. And Amazon also starting to pull right back down. So we talked about this resistance at 146, and you can see that we got it rejected there almost exactly at that level at 146 and started to pull right back down. Support level is going to stay put at 137. So this right here is going to be that level to watch for Amazon, all the way down to as low as 126 for this company as well. So resistance, like I said, is going to stay put at 145. Support level down to as low as 137. If you do get a breakdown below this level, then unfortunately, in my opinion, there is more downside, considering that we would be breaking down below this higher low, and the next support is going to be down to 126. Talking about Tesla. And Tesla here down about 60 basis points, so not really going anywhere, but it is still getting rejected at this lower high and this horizontal resistance. So this right here is going to be a level to watch at 277, 274. Support level is going to stay put at roughly around 260s for Tesla. So right now we are, again, within the context of this downtrend. Amazon is one of the very few companies that are still in an uptrend, but Tesla, Apple, Microsoft, Meta, AMD, NVDA, a lot of these companies, including Netflix, they're all trading within the context of a downtrend, making lower highs and lower lows, very similar to what we're witnessing with the S&P and the NASDAQ, right? Because S&P and NASDAQ are nothing but an aggregate of all these big tech companies and, of course, other stocks combined, but big tech pretty much makes up over 25-30% of the overall indexes. So if they are trading in a downtrend, it makes sense why those indices are also trading in a downtrend. So this is the lower high and the lower low pattern. Support level for Tesla is going to stay put at 260 down to as low as 243, with a resistance staying put at 277. Maybe I'll do like a separate, more dedicated video for Tesla, Palantir, NEO, and SoFi. So that's going to be coming out later today, but that's the downtrend for Tesla. Talking about NVIDIA here, and NVIDIA dropping close to 3.69%. I mentioned this in our Discord that I would not be surprised if it does end up in the low 400s. So $401 is a possibility for Netflix. So this right here is going to be that level to watch. And as unfortunate as it is, Netflix is going to create, in my opinion, a lot of, how should I say this, not so pleasant investors. Okay, that's just another way of saying backholders. And the reason I say that is because I understand the recency bias on the way up. And I understand why traders would have wanted to take advantage of that momentum and basically buy at over $475, $495, and over $500. And we'll take a look at the cost basis analysis later in one of my other videos. And we'll take a look at what percentage of shares are currently profitable versus what percent of shares are currently underwater. And that's going to give us a good understanding on where the euphoria was and where the most of the buying took place for NVIDIA. We'll talk about that in a separate video. I'm super excited to kind of see where the cost basis sits for NVIDIA and among all investors, and what percentage, like I said, are profitable or underwater on the shares. But of course, if it does end up dropping 20% from its highs, $401, I'm going to guess a majority of the shares, over 50%, would be underwater. I would not be surprised if that ends up being the number. So $401 is going to be that next support, and resistance is going to stay put at close to $497, close to $500. But of course, shout out to a lot of our members that have been holding this stock for multiple years, and they've bought it, in the low 80s or $100 when it was trading back in October. So congratulations on those huge gains. Could not be happier for you. But of course, we have to be understanding all the valuation, of course, the risk and reward as well, right? Is the marginal reward worth the additional risk? In most cases, when the stocks are valued 300, 400%, it's not really, right? So that is the kind of analysis that obviously is important, but low 400s is going to be that next support level to watch for NVIDIA. Talking about advanced micro devices, and AMD also dropping pretty aggressively here, right? So down almost 5%, still in the context of this downtrend. Support level is going to stay put at $99, and I will be looking to sell some puts very soon. The moment it cracks below 99 is the moment where I would be looking at selling some puts down to $80 or even lower. And then, of course, be very excited dollar cost average into AMD. So again, it was in a very much of an uptrend, but then more recently, though, short term trading in a downtrend at the moment and starting to break down below 99 is going to be very lucrative for AMD from a long-term perspective. And I would be loving to sell some puts and dollar cost averaging as well. Talking about PayPal, is it platforms? Yes, I think it is. PayPal here. It was higher, so it was up a little bit over PayPal Holdings. So up a little bit over. I don't know why I keep putting platform next to most companies here. It's just meta screwed with my head. But PayPal here, 64.21. So it was green to some very extent, trading as high as almost $66. But then, of course, selling right back down intraday as volatility started to creep up. And, of course, markets started rolling over. But support level, of course, we know is $57, $58. We got a huge gap to fill here with a resistance at 69 to $70 for PayPal Holdings. And talking about Square, Square here also down about 1.89%, so just in the low 50s, trading inside this green rectangle, very similar to what we have already witnessed in the past 2 to 3 times. And right now, support level is going to stay put at $51, $52, with the resistance all the way up to $67 per share for Square moving forward. Talking about Meta, and Meta here was down 3.6%, so definitely selling off quite aggressively, but still, I would say in the context of this support right here at close to $300, so didn't quite breach 300. Intraday it did, but ended up still closing about $300. So, of course, if it does break down below this level, the next support is going to be down to 259, 257 for Meta. That's going to be that next support, and of course, resistance right now stays put at 326. That's exactly where we got rejected towards the last week of July. Talking a little bit about Netflix now. Netflix I did a video on earlier today, so definitely do check that out if you are interested. And right now we're starting to see a bit of a breakdown below $398, closer to $400. And the next support is going to be down to $381 per share. This sell-off does seem a little bit more, driven by the CFO comments that he made that the ad business is not growing as well. But he did also mention that folks are opting to the ad-free tiers, which is actually a good thing for Netflix. And for some reason, it's actually being taken on as a negative, which is quite surprising. But nonetheless, next support is going to be down to $380. Resistance at $452. Did a video on Netflix earlier today, so make sure that you do check that out if you are interested. Google here. Looks like I am going to be giving up some of my shares here because it did close about 138.30, so my call expired in the money. And 144 is going to be that next resistance. Support level is going to stay put at 132, so today is September 15th. So I will be letting go of about one contract worth of shares. And we'll be looking to sell some more calls if, of course, the price keeps going higher. And, of course, at lower prices, we'll be looking at dollar cost averaging Google and buying more shares at those prices. At sub 100, closer to low 100s would be ideal. But right now, of course, we're on a very nice uptrend. So Google is also actually one of the few names that is in an uptrend, similar to Amazon. Support level is going to stay put at 131, 132. Resistance all the way up to 144 for this company. And talking about Microsoft here also dropping over 2.5%. So still, I would say very much in the context of a downtrend. So yesterday we did see a little bit of a break to the upside from that downtrend, but of course today kind of revalidating that resistance and starting to roll right over. Next support is going to stay put down to 313, 314 for Microsoft, all the way down to as low as 292, and resistance obviously stays put at 351 for Microsoft moving forward. And finally, we got Enphase and Shopify. Enphase here also struggling, 120s. It's been hovering around that level for weeks now, so it's just been trading sideways. I feel like there is some accumulation happening at the same time because we're just starting to trade sideways. It's been a big underperformer for this year. It's down a little bit over 55%. And right now inside this green rectangle of that good deal that I like to call it, sub 120. Would love to dollar cost average a little bit more into Enphase Energy. And finally, we got Shopify here. And Shopify also selling off down about 1.6%, starting to fill that gap almost entirely, a little bit left. And of course, we're trading in between that range with the resistance at $66, $67, support level at $54, $55 per share for Shopify. So hope you guys enjoyed this video and a complete update on the markets. The bottom line is we've got lots to unpack next week. Not only do we have the FOMC, but we've also got oil prices to take care of, because if they keep pushing higher, that's going to be a bigger problem for the market. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the alerts, all the members only benefits, private videos, intrinsic value spreadsheet with all the fair values. Everything's going to be included. As always, happy investing, and I'll see you all in the next video.